Hey everybody, welcome to Trading Capital's second half live session of the day trade room. We'll be taking you into the market close. It is currently 3:32, so we have about 28 minutes left in the session. Overall, you can see the S&P 500 has pulled off of the highs significantly. And considering we were overbought on all major time frames, that is certainly what was to be expected, which is why we were shorting. If you look at the daily chart, really nothing has changed from the S&P. You can see you've ran up into this downsloping major trend of resistance, as well as your COVID trend line connecting major pivot here to your major pivot low in June, and you bubbled up against that and you are hitting that resistance over there. So you can see the markets are still in this challenging area of resistance, and it's going to take a lot to get through. A couple headwinds for the market, and why I'm surprised that the markets are actually up this much, and why I'm going to put my head out there and my neck out there that say I think we've hit a major pivot high in the market sessions, especially when you see the likes of semiconductors up substantially. I think we see a near-term top in the markets here with this major pivot today because of the fact that the dollar is trying to have a short-term breakout, and yields have had a 3-day surge up and rally. And typically when you see that divergence, it means stocks likely catch up to the downside. So with yields continuing to surge and the dollar potentially breaking out, there certainly is a lot of headwinds, and being the fact that you are at major daily resistance, the long-term trend is likely to grip hold. We're still in a couple day trades. We did close another one, GOTU, so that was 2 winners in our pockets. The first one was Spotify. Second one was GOTU. We covered over here for a 12-cent gain. So we covered Spotify and GOTU. We're still shorting Netflix, but that's more of like a swing trade around this 353 level. We're also shorting Ally right here, which we're basically flat on the trade. And then Nvidia, we're out of the money slightly, but also shorting Nvidia. And then we're also shorting Coin, which we're basically flat on from this moment in time. So a couple things that we're keeping an eye on at the moment, but we'll just leave the S&P 500 up, and we'll see if we can continue to get some downside momentum on the S&P 500. Overall, in today's session, the semiconductors have been strong all day, but when you factor in some of these moves that the semis have had, I think we've put in a near-term top. Most people have been chasing this inverse head and shoulders pattern that is broken out. Actually, I'll pull it up on the SMH, which is what a lot of people have been looking at. But you can see this inverse pattern has broken out today, but it has not technically confirmed, and which is one of the reasons why I think we've put in a near-term pivot, and why the markets trended so much higher earlier in the day is because we had light volume, and then people were anticipating this inverse head and shoulders semiconductor pattern play out. Now, I'm a little bit skeptical because you have had a pretty sharp rally from this 196 level all the way to up here. So in my mind, you need some decent consolidation before you move up. And I'm waiting for that technical confirmation to get that clear signal that we have broken out in the semiconductors. Until I see that, I remain skeptical of this breakout. And then when you factor in that if you were to carry this major trendline neckline across, you can see that you do not connect to this major pivot. I would have preferred to see the neckline of the head and shoulders connect all 3 major pivot high points, but we've actually missed that. So it's kind of a little bit of a less certainty of probability that this pattern plays out. So we'll just have to continue to monitor it. Right now, the S&P is putting in a little bit of bearish consolidation on the 15-minute chart here. You can see the first time since we've rallied and went 3 days positive, right around this point over here, we've traded above the 25-day moving average. Now we've lost that intraday moving average today. We have not confirmed below it, but we are putting in bearish consolidation, which does favor a potential breakdown. So let's just keep our options open. Right now, obviously tomorrow we'll be on watch for a semiconductor break, but I do think that it's very likely that the semis continue to pull back in the near term. Tech has been leading the charge. The QQQ is up almost 2% on the session, pulled off the highs. So you can see the dollar is hitting some near-term resistance, but it is putting in potential bullish consolidation, and it is oversold. And if you look at the euro chart, sorry, that's the wrong one. Euro, Rwanda. You can see on the monthly chart here, when we pull up the currency markets, the euro is the heaviest weighted currency in the DXY, so therefore it influences the dollar the most. I believe it's a upward weighting of about 53 to 57%. But you can see on the monthly chart, this pivot goes all the way back to 2017, 2020, COVID low. This was your breakdown point, confirmed it. Now you've retraced back to that breakdown zone. And it's very likely that this is going to be near-term resistance on the euro. So if the euro doesn't move up anymore, that means that the dollar has room to move up, which should put additional pressure on equity markets. So the S&P 500 is potentially showing some weakness here. If we lose this major pivot here around the 4,000 level, that's very, very bearish in the short term. Coinbase, we're now in the money on our trade. My parameters haven't really changed. You can see NVIDIA, we're slightly out of the money. Our average is sitting right around here, 189.36. 189.36. And that's a 5-6 position on NVIDIA. We have a 1-6 position on Ally. And we have a 2-6 position on Coin.
So that's what's working. Let's look at what's not doing too well. And honestly, it's a lot of energy. You see ConocoPhillips, you see Schlumberger, you also see Xylem. We were just talking about a little bit of M&A in that space, but overall, Romain, this is still pretty green market.
Netflix is coming in a little bit harder now, as seen on the chart.
Few days and really the last few weeks here, and the way the sentiment has shifted, is the worst really behind us?
So Tesla's been one of the outperformers today, trading up over 6.5%, was near 8% at the highs. Amazon's gone negative, Google's up 1.5. So you're seeing a little bit of most strength in the mega caps, but there is a little bit of weakness. Crypto miners are doing well as well. Ford's showing great strength, up 3% even after its announced layoffs.
The more these shorts get squeezed, and I think
it has been a pretty terrific day for the markets yet again.
thankfully behind us until
I'm
the next.
telling you, once the markets wake up to that bond market yield divergence, that should be negative for equities, just like it's been the last 7 times we saw the divergence. This is now the 8th time. It's one of the first times we're witnessing it in 2023, but we did see the bond and stock divergence occur 7 times in 2022, and that resulted in stocks selling off. I think the market has really rejoiced over a Fed pivot that we actually don't even have yet. And when you factor in that the bond market is supposed to be the smartest money in the world, for instance, everyone says bond market is smart money, you know, which we like to respect at times, but when you factor in smart money was buying bonds up here April 2020, and look what happened. So would you consider all these bond traders smart money buying up here? I certainly wouldn't. So the dollar's pulling a little bit in.
Security software names that are still down 60, 70, 80%. So, taking a shot at that in a new year with new money, clearly is one of the drivers. But what we won't know until we get through this weekend next, when we'll have about half of the S&P 500 reporting, is if actually the sponsorship of the beaten up technology and communication services stocks actually makes sense when we get earnings reported and we get guidance for 23. I think that'll give us a better picture. So we tend to get a dissipation of this January effect once we sort of get into the heart of earnings season, and that really kicks off this weekend next.
All right, just getting started here with Art Hogan, Chief Market Strategist at B. Riley Wealth.
The S&P can close above this pivot here. Or sorry, actually I'll draw it in here. On an intraday basis, the S&P needs to close above this red line here, this 400.3, in order for the bear flag to potentially be negated. 400.3. So that is the level on the SPY. The S&P is trying to float up. Yields are still remaining near the highs. Nvidia is still remaining near the highs. Markets are trying to push up here. Notice how this red line is major resistance. The dollar is pulling in. Netflix is still coming in. Nvidia's remaining near the highs. Allies catching a little float. Coins catching a little float. Notice how the S&P is really struggling at this red line. That's a key pivot. Lots of volume coming in on this candle. Volume is upticking. I think it's really important to point out the fact that we're starting to see weakness in names like AstraZeneca. So let me just pull up AZN chart, which we are short around the 70-40 level. So this is good to see. But when you have the market leaders like AZN, AstraZeneca, who led this rally higher and stayed consistently strong pretty much the whole last quarter of 2022, when you start to see distribution and falling into weakness as the markets are strong, that's a little bit of a negative divergence for the markets, and we have to be mindful that often when the leaders that led the market to the upside start weakening, that could mean some downside for the indices. Now markets are floating up. Next major pivot zone of resistance is this area here. You can see that you're into these two pivots, which you can see you've already tagged. So this major pivot over here is your next big resistance. The dollar is weakening slightly. And the volume is light, so it does favor the markets to float and grind higher.
Of course, as Microsoft and Tesla.
Still with us is Art Hogan. He is Chief Market Strategy over at B. Riley Wealth. And the NASDAQ 100 is outperforming today. Tech has been outperforming this year. And I'm wondering, in your view, does the tech rally that we're seeing now have any similar contours to what we saw in 2020 when the economy clearly was in a bad place? It feels like everyone flocked to tech. What is different right now? Compare and contrast.
Yeah, well, the rally in 2020 really had embodied in it a lot of things that all of a sudden we were forced to need versus just want. So, think about, the newly minted pandemic darlings, things like an exercise bike with a iPad on it, or Zoom video and all sorts of different payment things. So to the extent that the rally in 2023 starts off with not necessarily that kind of feeling to it, and much more of okay, what's been beaten up but is also defensible here. And it really feels like if you're, you see Apple bouncing off one.
Continuing to grind. Let's look at the hourly chart. So on an hourly basis, you're still trading inside of this candle. So that's your next pivot high to beat. This 401.06 is your major pivot to beat. The light volume float up continues.
For sure, right? And if we're at the beginning of an upcycle, if we're going to work our way through the economic slowdown, by the end of the second quarter into the third quarter, cyclicals are going to have their run. I think that what we're seeing at the beginning of this year has more to do with that sort of January effect that tends to dissipate post-earnings season when we actually have the facts and not just the feeling. So yeah, I think there's going to be a case that if you were to set up a barbell
Despite the market pushing up, Netflix isn't really catching a bid with the market. So a little bit of relative weakness creeping in. Nvidia's pushing to the highs.
Of course, the story of the day was that you had activist investor Elliott taking a multi-billion-dollar stake. You look at what that did to shares, up about 3% or so. Of course, this is after Salesforce already went through layoffs, had a big stock drawdown, so a little bit of optimism in Salesforce. So that's the micro. Let's go back to the macro, Art, and let's talk about financial conditions, because interestingly, if you look at this Bloomberg measure, financial conditions are actually in easy territory once again. And you think about what we might get from the Federal Reserve both next week, but over the course of this year, does the fact that financial conditions have been easing make things a little bit more difficult for this Fed?
Yeah, Katie, I think there's two conundrums facing the Fed right now when they meet the end of January and make their decision on February 1st. One is financial conditions. They'd like to see them not easier. They'd like to see them tighter. That's one of the jobs of monetary policy. And the other is to strengthen the labor market, right? We've got a 40-year low unemployment rate at 3.5%. Clearly, the weekly jobless claims have not responded to the layoffs that we've already heard about. So, and I think that's the biggest conundrum the Fed has. They know that they've seen inflation coming down in real terms, but they'd really like to see financial conditions tightening up a bit. That's one of the effects they'd like to feel, and they'd certainly like to see the wages compress a bit and the unemployment rate rise. And if anything, that's going to be the one thing that either makes them go a step too far or stay too long. And both of those things are possible. We know they're going to raise by 25 basis points. It's almost a certainty at the February 1st meeting, but we don't know if that means there's another 25 basis points behind that at March, and do they pause there and stay there too long?
I am curious, and I mean, where do you sort of think we end up here? I know we get, if I remember correctly, later this week, we're going to get the latest PCE data, which is, I think,
markets are continuing to float off the lows
here in the most recent period, which would be the first time we've been under 5%, basically in this inflationary cycle.
Yeah, I think the PCE is on a trajectory to likely have a 3 handle at the core level by the fourth quarter of next year. And can you imagine being the Fed with a 5 or 5.25% Fed funds rate and a 3% PCE, their favorite inflation gauge, and not feeling like they're too restrictive? So while the Fed hasn't priced in any rate cuts this year, consensus has at least 25 basis points, if not 50 basis points by the end of the year. I think that they're underestimating how quickly inflation's coming down, and they're overestimating how long they're going to have to be in this battle. I think at some point in time, the layoffs that we've heard announced show up in the weekly jobless claims. There's a lag there because
we have a couple earnings after the bell, but really no major names. The major names start tomorrow. We have Halliburton, Danaher, Johnson & Johnson. So some of the big boys are starting to report. Got Verizon. Keep scrolling down the list here. We got 3M as well, Union Pacific, RTX. So a lot of big names starting to report. I mean, when you look at the market caps, Microsoft, J&J, we got trillions and trillions and trillions of dollars in earnings and market cap weightings coming in tomorrow. So we could see a market moving event tomorrow based off of how those companies are reporting. But obviously Microsoft's the big one to keep an eye on. Everyone will be watching Microsoft.
I certainly think that if that's the case, there is a point earlier, the cyclicals have a better runway in front of them, in the second half of this year and as we exit. So that certainly plays out. And for all of the things that we've been waiting for.
The light volume is just favoring the markets to grind higher. Just drifting higher.
This year. So if you've been on this financials bandwagon, just be wary of the fact the same thing happens in reverse as rates start receding a bit.
All right, Art, always wonderful to talk to you. Art Hogan, great way to start the week. Chief Market Strategist over at B. Riley Wealth. As we count you down to the closing bells here,
about 3 minutes left to that price action.
Just
3 minutes left, and the spiders are just pulling off of the highs.
The NASDAQ up about 2%. A lot of this, of course, being fueled, Katie, by the moves that we've been seeing when it comes to a lot of the chip stocks here. Advanced Micro Devices up 9% on the day.
NVIDIA, too. It seems the whole sector is really pushing higher today after that positive note from Barclays.
So fairly light volume session. We're trading at about 68 million shares, so it'll probably go up to about 75 with the after hours.
Look at sort of the makers of steel and the makers of aggregate goods, and now today it really is a look at the chip sector. AMD up 9%, Western Digital up about 8.5%, NVIDIA up about 7%. We do move closer to those closing bells. Full market coverage as always right here on Bloomberg as we take you to the bell and beyond.
So the markets are finishing on a fairly positive note today. You have had a broad market rally, and the S&P is up substantially on the session, finishing up 1.2%. The Q's over 2%, and the IWM, which is the small cap Russell 2000, is finishing up about 1.23%. So broad market rally across the indices. And considering markets are trading at resistance, this is where heading into earnings reports are really intriguing, because it certainly narrows down that risk to reward ratio, that if companies aka bomb or shit the bed, you can see stocks drop substantially lower, considering they have had a tremendous rally. Now, even if companies report well or as expected, that's typically where you could see additional selling commence, because once again we're at resistance. We're about 15 seconds left in this candle, almost closing on the S&P. We're going to be holding our Nvidia overnight, our Ally overnight, and our coin short overnight, as well as our Netflix swing. But pulling off the highs a little bit here, that is the closing bell. Markets are up, broad market rally, so another win for the bulls today. But let's keep in mind that negative divergence between bonds and stocks. I've seen this scenario play out many times, and it typically favors lower prices for equities. So overall, let's be aware of what transpires tomorrow with the earnings kicking up, and we'll see you on the charts tomorrow. Take care, everybody, and please give this video a big like down below and subscribe to our YouTube channel. Take care.